What is going on, everybody? How you doing? Vega here for SerpentX Special Forces, and it is another episode of Caffeine and Crypto. I welcome you to join me with a caffeinated beverage of your choice, energy drink, coffee, whatever you may like. Or even if you are not a caffeine freak like myself, feel free to grab your favorite beverage and join us. This is a live stream that we do every Saturday, going through some news articles that I picked out. May not be the most popular news articles, but we talk about crypto, we talk about various crypto projects, news in those projects, and even sometimes a little bit about the stock market. It's been a red day, to be honest. It's been a very red day, but I have a special guest with me, Savage Mind.
What is going on, everybody?
Last minute entry into the.
What's up, Serpent?
Not much, bud. You got your coffee today? I like that shirt you got.
I do. Yeah, it's the word cloud shirt everybody's talking about.
Yeah, I saw it.
I like it. I like it.
Did you ever figure out? Did you ever
Your
figure
name
that
is
out?
the biggest one on there for some
Did you ever
reason.
figure out why?
No.
I saw that. I was like, I don't know why either. Like,
No,
my
it's
name
just-
is definitely not the longest.
No. Red Panda's he's probably the longest one. It's down there at the bottom left. Actually, there's a lot of duplication. Like if you keep looking at it, you'll find people's names repeated but smaller and stuff. So like
Well,
your name's on here a bunch of times actually.
It's probably going down into infinity.
Yeah.
We're looking down into the Bitcoin infinity. What's going on, everybody? Thank you for stopping by. Thank you for joining Savage and myself. And there we go. I got myself on the screen. It was just Savage there for a second. All right.
Yeah.
So, let's see here. So many great people coming over from Red Pen and Mining. Red, thank you so much for your support and help, buddy. I really appreciate everything you do. I'm glad that you were able to put out your 3060 video, by the way, as well, mining performance in comparison with mine, so you guys in the crypto community can draw your own conclusions, stuff like that. Whether or not we'll have a BIOS crack is yet to be determined, but we will see. So, Cat Lover, Limitless Combo, Hugh, the Yester, Levy, Chakra, Malik. Everybody, man, I cannot say everybody's names. Johnny Lucky 7, B-Tech, Migs, seen you around for a bit. Unknown Crypto, what's up, bud? Mark from Sales, Mr. Mac Mercy, Yashnik, what's up, buddy? A lot of good people here. All right, good thing. If I didn't call out your name, I'm sorry. Techman, thank you for being a member of the X Special Forces. Time for us to pick another coin. What's next after ETH? Well, we're gonna talk a little bit about that, but hey, hang on to that thought. Been a red day today. Honestly, this week has not been too exciting. Matter of fact, I did have my chart up here. I don't have any crazy TA or anything like lines drawn, pie charts, anything like that. But is the dip over? Is I think what a lot of people are wondering. Let me bring this chart up. Honestly, I would say no. I think we're still going to see a little bit more red in this upcoming week. I could be wrong, not financial advice, but I still think we're going to see some red because with the problem is with the stock market doing what it's doing, and a lot of what do you call them? It's not institutional investment, but the what's the people called us? Retail investors. There you go. So retail, people like us that have been buying stocks and stuff like that. I've been buying stocks at a discount, but most of my portfolio's in crypto, which there will be a video on the future. I can't give you a specific date of what my current crypto portfolio holdings are. You won't have any detail about what is what, but you will have like percentages of what makes up. But most of my assets is going to be in crypto rather than the stocks because I've been alive through much of the stock markets and its dips and seen what it's done to my family and friends, so I don't want to put all my eggs in one basket, especially that basket. But yeah, that will come out in the future. But I expect a little bit of red, a little bit more red throughout the week. If anything, I would say look around the 43,000, 42,000 mark for a good buy opportunity before we might push back up. We might go all the way down to 40. But I don't think this is over yet. I don't think the bloodbath is yet done because a lot of the people that are in crypto are also the same retail or investors that are in the stock markets. And so one tends to follow the other, even though I wish they were not correlated. All right, so let's go into some news topics. If you would be patient with me. That's a head and shoulders pattern at the end of the graph. Yeah. You're talking about this right here. But we'll see. You know, every time we say Bitcoin's going to do something, it does the opposite. It's like my wife. So is Apple buying Bitcoin separating fact from fiction? A lot of tech companies like PayPal and Tesla have been embracing Bitcoin and buying into the cryptocurrency. Industry observers are looking to Apple as the next major firm to step into crypto. And this really is what started the whole boom, right? So we had PayPal news come out. Tesla bought some secretly and then revealed it. So, we got other tech companies that may jump in, and Apple being one of those could be our next bull run. But I don't think we're ever going to see a $10,000 Bitcoin again. So if you got in at the 10,000 or were mining around the 10,000 and you're still hodling for those coins or hanging on to them, you should probably be good. Just, this is nothing new to us as miners and people in the crypto space. We've seen bear markets, bull markets come and go, and we're still here and we're still mining because we believe in X, Y, and Z, whatever you believe. But Google, Microsoft, Facebook, Amazon, Apple, all of these guys have an opportunity to get into Bitcoin. And when they do, we may see some additional pumps coming our way. Apple first came under scrutiny from the crypto community in 2012 after 2 Bitcoin apps were removed from the App Store on the grounds that the apps must comply with the legal requirements at any location where they were made available to users. Despite the arguments at the time, there were no legal requirements surrounding Bitcoin and other digital assets. Apple remained steadfast in its decision. It wasn't until much later, 2014, that Apple reconsidered its stance on Bitcoin and crypto apps. After a number of other crypto-centric apps, including Coinbase mobile app, were booted from the App Store, Apple announced plans to change its anti-crypto policy in June of that year during the annual Worldwide Developers Conference in San Francisco. Right? So now Coinbase is available in pretty much every Google Play App Store possibility out there, and we have even more and more apps coming out. Apple may be a little bit more restricted in what's available, like I can't get all the apps that's in the Google App Store available, but at least they're a little bit more open to it. In 2019, Apple submitted a document with the U.S. Securities, or the SEC, that outlined the company's role in establishing blockchain guidelines for the Responsible Business Alliance, Responsible Minerals Initiative. Responsible Business Alliance, responsible. Why would you say that responsible? Anyways, consortium of companies dedicated to improve welfare standards for the mineral miners in their supply chains. So the reason I read that to you is I want you to understand the history that Apple has with cryptocurrency. Okay, so they frowned upon it in 2012. They became a little bit more open to it in 2014. And now these crypto applications, Gemini, Coinbase, I think Binance, are available on the Apple App Store. So will Apple's next step in embracing Bitcoin be to buy Bitcoin, to establish a reserve in Bitcoin? Who's to say? As always, I put all of these articles in the description below. If you want to check it out and read some more, because I know you guys don't like me reading to you. This isn't reading Rainbow or anything like that, but I appreciate you guys stopping by. Alright, so let's see here. Any thoughts, Savage, on companies like Tesla, Apple, PayPal buying Bitcoin?
Well, somebody said in the comments over here that probably pretty true that, these big institutions or big companies like Tesla buying Bitcoin, these folks are fighting with each other, basically, right? In a way, they're competing with each other. So someone said that there's really no way that Elon is going to let any other company buy Bitcoin for less than he bought it for, right? Which means that if it does get down to that level, he'll buy and cause the value to go up again. And there's probably some truth to that. That type of stuff happens. So yeah, it's interesting to watch, but we have to remember as the community, as the retail folks, that whenever they buy it, we can't buy it. So whenever they're buying all these dips, they're buying huge amounts.
Huge
amounts. And it's causing basically a shortage, right? And they're going to own majorities. I think, what is it, 1%, 2% for Tesla now, something like that, of the total BTC supply. That's huge. That's a huge amount, Yeah, I think I tweeted about it the other day that right now, this is whenever Bitcoin was at 20,000 or even 10,000, it was out of range for some people, for the average person to own one full Bitcoin. That's kind of like the goal now. Mm-hmm. Like 4 years ago, it was to own 10, right? And then 4 years before that, it was to own 100 or whatever, and that number of Bitcoin to make it, or to be
a millionaire or whatever,
1%, has shrunk down to 1. And right now you're seeing a huge, it's an opportunity right now, but what you're seeing that it's going to be really difficult for the average person to even own a single Bitcoin, and a large portion of that is because of these big companies buying them. So, and the value going up.
And look at the max supply. So the max supply is 21
million,
and then the circulating supply is already at
18.6. Now there's probably 4 or 5 million of the circulating supply that are not in circulation, right? You've got
that got lost
or stolen, or not stolen, but lost.
I'm part of that group.
Yeah. So, Satoshi, his wallets are saying basically they believe that he has about a million, right? So a million out of that 18 million is for sure probably locked up and never to be accessible again. So I don't know.
Well,
we're looking at 14 million actually.
Crypto Mikhail mentioned that some of these institutions that are selling Bitcoin or whatever are actually selling more than what's being mined. So I wonder where they're getting the additional Bitcoin from, considering the circulating supply.
They're buying more than
they're buying more than what's being mined.
Right.
So
yeah, they buy a large percentage more than every day that's being mined. Yeah, that's true.
And you got to think, the more they buy, the less that's actually being traded on the exchanges or whatnot, or that could be circulated into your hands. So we'll have to see. You guys need to get some of that Bitcoin in your wallets. Obviously, a wallet that you own the private keys to, not your keys, not your coins. If you don't know what wallet to choose, check out my channel. I've done a number of videos on that as well. But Cardano, ADA, token tripled in February to outperform CoinDesk 20. Traders are betting on smart contract blockchain, which aims to compete with the market leader Ethereum, even though it doesn't yet have smart contract functionality. Cardano, which is a smart contract blockchain, is aiming to rival Ethereum, tripled in February to dominate its performance rankings among the CoinDesk 20 digital assets. The gains came during a bullish month across the board for cryptocurrencies, with Bitcoin the largest, posting a 36% return. Ethereum, the second largest, the native token of Ethereum blockchain, climbed 7.4% a month. But it's Cardano and other Ethereum alternatives that toppled the rankings, aside from the 274% gain for the ADA, Atom, which rose 122%. And these tokens are what you would consider alternatives to Ethereum, right? So one of the questions was, what are we going to mine after Ethereum, which SerpentX did a pretty good video about, but we'll talk more about that in a second. Cardano's gains are so impressive that the market capitalization climbed to about $40 billion, becoming the third most valuable digital asset and vaulting past cryptocurrencies like Bitcoin Cash, which, thanks Savage for sending me that little bit, Litecoin, that led the industry standings in recent years. XRP, the token used in Ripple Labs payment network, fell 15% on the month. Don't care. ADA climbed to a new all-time high of $1.49 on February 27th, topping from the peak of $1.30. I think it's around $1.11 right now. ADA is. The point being, and again, not going to read this entire article to you. The point being is that these alternative tokens to Ethereum are very competitive, and you're going to see more and more of them not only pop up, but possibly take some of that market from Ethereum as a whole. At least that's my prediction. Again, not financial advice, But that's my prediction for what's going on. I'm a strong believer in ADA, and you'll see in my portfolio the percentage that Cardano or ADA makes up, as well as Cosmos or Atom. Speaking of additional alternatives, Matic, xDai or Stake, Loopring rally as Ethereum gas fees rise. Now, Ethereum gas is still up there, isn't it? What's that website we talked about? I think it's the gas station. I think I just saw it. Let me try to see if I can find it. Yeah, that's getting a little bit darker. So here's a little gas price time of the day to where you can see like the weekends are still the best, like late at night on Sunday, or early morning Saturday, Friday going into Saturday. But you can see that during the week it gets really expensive. These prices are not going down, people. These prices are not going down. It's going to be more predictable with EIP 1559, but the prices are not going down. So as gas prices continue to rise, we have alternative tokens soar. At the start of the month, has brought renewed fervor from the cryptocurrency market or for the cryptocurrency market as Bitcoin's price steadily climbed to 43,000. Now, obviously, this is based on February 28th data to an all-time high of 49.20, which right now we're around 47, so we pulled back a little bit. But Matic officially launched Layer 2 aggregator for Ethereum on February 9th as a way to offer interoperability protocol for the network. Since excitement for the rebrand began, Matic's price has increased 400% from 5 cents to an all-time high of 25 cents, or almost 25 cents on March 1st. Growing excitement for EVGA mainnet launch on March 2nd has also brought a boost of attention and the trading of Matic. xDai is another layer 2 solution. That's what you're going to hear, a lot of the words layer 2 that has caught the attention of investors over the past few weeks. As xDai chain is a stable payment blockchain created by the POA network and Ethereum open source public sidechain that offers a framework for smart contracts. The blockchain stake token is designed to be a multi-chain staking token that validators and delegators offer as collateral in order to participate in a consensus mechanism and receive staking incentives for block production. The goal of xDai platform is to offer fast and inexpensive transactions on the Ethereum network. Now, that's another alternative. Loopring. Loopring is another layer 2. Keyword, layer 2. Solution that specifically focuses on the creation of decentralized cryptocurrency exchanges, DEXs. Right? So DEXs stand for decentralized exchanges. One of the major sources of congestion on the Ethereum network is the ever-growing activity of popular DEXs like Uniswap and SushiSwap. Is there a sushi shop? I need to go to a sushi shop. A separate sidechain made specifically for exchange trading could help alleviate congestion on the network, and this is what Loopring aspires to provide, right? So even with EIP 1559 offering, and that's one thing that is coming in 1559 is, as my analogy previously, think of it as a 4-lane highway, right? And so we got people slowing down. When people start to slow down, we get this chain effect that starts to slow down traffic. And now we start to get congestion. 1559 is supposed to alleviate that congestion so we can move more freely, but it's not going to remove the congestion. And the congestion as a whole, think of it as the fees, right? The fees are still probably going to be up there, but it's going to be more predictable. We're going to know what we're going to pay based on the previous block, yada, yada, yada. But the fees themselves are still going to remain high. And these alternatives are offering, ways to, one, help continue to alleviate the congestion, but also, built on a layer 2 solution that's a little bit more, I don't know how to say it. Until ETH 2.0 comes out, I think Ethereum as a whole, in my personal opinion, is going to still continue to have trouble. I'm not an Ethereum expert, but we're going to talk more about that here in just a second. I got 2 more articles to go over. Volkswagen pilots blockchain to integrate electric vehicles with power grids. Automobile makers everywhere are betting big on electric vehicles, which is why I look at stocks and blockchain opportunities in the EV space or anything to do with green energy. As the world begins to push for more environmentally friendly modes of transportation, while fewer than 1% of the cars on the road in the United States are electric, a number of automobile manufacturers are aiming to change this by stopping sales of gasoline-powered cars. At the end of 2021, General Motors said it would stop selling gas-powered cars and trucks by 2035. In addition, automakers such as Tesla, Ford, Volkswagen, and even Porsche have announced plans to introduce new electric models in the coming years. All right, now let's skip past that. Energy Web, a nonprofit focused on energy transition through open source technology, announced a partnership with Volkswagen Group and Innovation, the research department of Volkswagen, to investigate ways of using open source software to integrate EVs and charging stations into the global power grid. Jesse Morris, the chief commercial officer of Energy Web, told Cointelegraph that the company's vision is to enable Volkswagen EVs or charging stations to be digitized and able to participate in an energy market. So when I talked in the past about blockchain, this is just one of the possible real world benefits or real world use cases that we can begin to see throughout the world. I'm not sure if UPS is still doing it, but I think weren't they trying to do something with tracking packages and stuff like that, like VeChain, in order to prove that your Louis Vuitton purse is actually Louis Vuitton. VeChain would have that particular purse like logged on their network or in their blockchain. And just like Savage mentioned with the Subaru project with Ravencoin issuing assets to those cars, so that way you can actually have the log for the maintenance and everything about that car, what was done, using blockchain technology to monitor, to validate that, what you bought was genuine, to validate, what you got and all the data on it, all the past history. Kind of like the Carfax is what I would think of with Savage Mind's scenario. And we did this a while back, him and I just talking about it, but he really put it down to pavement. But using blockchain to kind of help out the world is something that I'm very interested and ecstatic about. SushiSwap, another one. Fleeing Ethereum fees is now live on Binance Smart Chain. So Ethereum is losing some of its big guys. Decentralized exchange DEX SushiSwap is now live on Binance Smart Chain. Fantom, Polygon, xDai Chain, and Moonbeam Network, according to the project CTO Joseph, and one of the knockoff projects most notable divergence from Uniswap today. SushiSwap has some 3.3 billion in liquidity and 300 million in 24-hour volume. Was formerly only hosted on Ethereum blockchain, which is currently suffering under increasing high transaction fees. Many Ethereum-based projects have been scrambling for scaling solutions such as rollups or moving to another blockchain that supports ERC20 style digital assets. The exchange first garnered attention after copying Uniswap's open source code, adding a token that then diverted liquidity away from Uniswap towards itself with the novel vampire mining. All right, so SushiSwap is now over on the Binance chain because they needed to get away from all those increasing fees, congestion, and a number of other things that I believe EIP 1559 is intending to make work, but as far as implementation, what is Ethereum going to lose here? Is Ethereum going to be one of those tokens that is start to losing its miners, its people? We'll have to wait and see. But speaking of Ethereum, Savage Mind. I'm going to go through this article, but I want you to lead this one. So Ethereum EIP 1559 fee market overhaul, greenlit for July. A large majority of Ethereum miners are against the proposal. But that hasn't stopped developers from scheduling the upgrade for July. One of the most significant and contentious alterations to Ethereum blockchain in recent memory is now scheduled for inclusion into its code base. Ethereum Improvement Proposal EIP 1559 will be packaged with the London hard fork this coming July, regardless of the mining industry's discontent with the proposal. According to all core developers called Friday, at least 5 of the EIPs are likely to join EIP 1559 London. EIP 1559 flips a typical blockchain transaction on its head in order to fix numerous issues with the Ethereum user experience. Traditionally, a user sends a gas fee to a miner for a transaction to be included in the block. The gas fee has now been sent to the network itself as sort of a burn called base fee, which only with only an additional tip paid to miners. The burnt fee in the algorithmic set as well. Man, why do you keep using these stupid words? Making it easier for users to pay a fair fee. So again, not lowering the fee, just making it more predictable. Savage, I'm going to stop here. Go ahead.
Well, I'm not an EIP 1559 expert or anything. That would be leave that to Max Voltage. He's over there in the comments section or in the chat. If you've got any serious questions about 1559, you would ask him. But in my opinion, there's parts of EIP 1559 that make sense. And from a developer, actually not even a developer, but from a holder or an investor's standpoint in Ethereum, it kind of does make sense because there's a slight chance, that Ethereum will become deflationary in a lot of situations. I think I'm going to say this correctly. So if the base fee, is more than base fee is more than the block rewards, then Ethereum becomes deflationary because those base fees are being burned, right, in EIP 1559. And you're only getting the two Ethereum block rewards each block every 13 seconds or so right now. So those base fees being burned, if they're higher than the block reward, then it's deflationary, and then the inverse happens whenever it's less than, because if you're burning less fees than you're actually block reward, then Ethereum goes back to being inflationary. Now, I don't know how dynamic that's going to be, whether or not it's going to really be something that we can look at and rely on it being one or the other. I think it's going to fluctuate wildly, probably, depending on what's going on the Ethereum network. So the speculation is that it will actually, people that are for 1559 are really for it. I mean, really for it. They're like, praising that it's getting done and screw the miners and all that stuff. And here's the thing that I always go back to. For the past 3 years, a large portion of the past 3 years, if you were mining Ethereum like nonstop, there were months where you were paying out of pocket to secure their network for them, right? In that 3 years, depending on your electric costs, all those different factors. I get it. Don't yell at me over the electric costs and all that stuff. I'm just saying, like, in my situation, if I was mining Ethereum for all that time, there's many, many months, large stretches where it would not have been profitable, where I would have been paying out of pocket to secure their network for them. And now that there's been a 3 or 4 months, and then we had a little bit back in September, October timeframe too, but we've had 3 or 4 months of really great Ethereum profits on the mining side, and they think, being the developers and the Ethereum core devs and all that we should just be happy with that, and that should be enough, and that we should just shut up about 1559 and burning the fees and all that stuff. And that's where it's kind of like this. I think that's where you get that animosity or that tension between those two groups, is they don't understand what we've done, and they don't owe us anything. We don't owe them anything. Okay, but you have to look at the fact that we've been supporting the network for a long time, while they've been getting their stuff together, because the whole proof of stake thing was supposed to happen in a couple years after launch, and it's not yet. So we are the ones that are being taxed with, supporting the network from a proof of work mining standpoint, and now we're being treated like, that we should just be happy with
anything.
I'm still sort of on the fence with 1559, because I think in the long run it ain't gonna matter. I don't think it's gonna matter at all. And we'll talk about that in a minute whenever you get on with this article here, because that's the real issue that I would like to talk about.
Okay. Well, let me just read a couple of points here and we'll go into it. But let's see here. Where was I? Total mining revenue. All right, so total mining revenue surpassed a record 1.3 billion in February, with some 50% coming from fees alone, according to the coin metrics. An increase in both the price of Ether and transaction fees had introduced a wave of new hash power to the network, which is more than double of that a year ago. Minority mining pool, Flex Pool, which Chris from Flex Pool, I would like to speak with you. I know Bitsby Trippin said he would like to get you on, but I would like to get you on one of these Saturdays and talk with you and stuff like that. Launched a marketing campaign against EIP, several minority pools, followed by majority pools, Ethermine and Spark Pool. Over 60% of the Ethereum network hash rate is now against the proposal. F2 pool is the largest pool in favor of EIP 1559, with some 10% of the hash power. So let's see here. On call, yada yada. Delayed difficulty bomb called Ice Age. Incrementally increases difficulty in mining Ethereum. All right. So basically, if the pools don't fork and people continue to mine on the current Ethereum blockchain, the difficulty bomb will blow up, and then mining Ethereum is going to be pointless. So they're forcing everybody to move over. MEV, miner extracted value, is what MEV stands for. MEV to the rescue. Mining pools have only a few options to stop EIP 1559 now that it's included, and most of these would be considered actively hostile against the network. The largest danger would be the 51% attack against Ethereum, which would censor transactions using the EIP's framework. It remains unlikely, however, given various financial incentives, not to attack the network. For example, successfully using a 51% attack against Ethereum would likely decrease the value of Ether in the short term, or maybe not, as 3 51% attacks on Ethereum Classic have shown. Moreover, a new revenue replacement is quickly becoming available for mining networks called miner extracted value. Miners can take advantage of their place as arbiters in how blocks are packaged and front-run profitable trades. MEV is currently popular among decentralized finance DeFi traders who bid up gas prices to secure their place in the block. But many Ethereum pools are currently implementing MEV software to gather this untapped source of revenue. Now, here's something I want to mention. When we had that meeting, and if you guys haven't caught on with the meeting, right? So I had a few meetings here. I had one with Max Voltage, which was really good, just me and him one-on-one. And then I had a crypto miners meeting with the gang, and then another one after the Cat Herder EIP 1559 discussion. So if you haven't checked that out, I know they're long, but please check that out because it's very informative. But there's a few things that I mentioned in that thing. One is I'm worried about profitability, right? As all miners should be, right? Because you're trying to pay for electricity, costs, hardware, all that stuff. The other one is security. This whole model of we're overpaying for security is just complete BS. I don't like cursing on my channel. Please try to avoid cursing in the live chat. Let's be respectful to each other. But that is complete BS. We're overpaying for security. Okay, first off, why would you buy a Lamborghini, drive to, let's say Savage will know this, drive to the west side of Jacksonville and park it in the streets? You wouldn't. That's not a secure place to leave your Lamborghini, but you want to pay the least security. Okay, well, your Lamborghini is going to get parted out real quick. I'll tell you that right now. Welcome to the west side. But these guys, as Savage said, are not understanding because they're just worried about, how annoying it is to complete transactions, to make trades and stuff like that on the Ethereum network, whether it's Uniswap or whatever. And they're not understanding, as Savage said, what we have done over the years. We've been mining through the bear market, securing the network. We've been mining through the ups and downs. We've been dealing with EIP after EIP. We've been asking for ASICs to be kicked off the network, and now they're more open to ASICs, so ASICs are going to continue to work for it, and they're even working with ASIC manufacturers now. So when this situation happens, and they don't think it's going to happen, but they don't know 100% for certain because the capability is there. If most of the miners leave the network, and it's just the ASICs with their supposed 10%, they're going to be more susceptible to 51% attacks. Will that drive the price down? We don't know. I mean, Ethereum Classic kind of hung in there with 3 attacks, and the price was still around 6 to 10. But they don't understand the full scope of things, and they're thinking, oh, they're just miners. They don't know what they're talking about. We're the real devs. We're the real people. We're the real traders and entrepreneurs in this space. They don't know what they're talking about. Okay, well, you better move to proof of stake quick, because if you open yourself up to an attack and somebody can profitably attack you, they will. If there's an option to attack you and do it profitably, they will. Just my personal opinion. I could be 100% wrong, but I always respect others until they show me a lack of respect. And when they show me a lack of respect, I don't waste my time on them. And that's kind of where I'm at with Ethereum. I have what I have in Ethereum, but considering the way they proceeded, I may be moving, and I already have moved to other projects to mine on. But go ahead, Savage.
Okay, so back to 1559 real quick. One of the main goals of 1559 is to make transaction fees more predictable for the end user. Get it, totally. I like the fact that it is user interface focused, right? So I get that. I think that that's a good thing. I don't think that that's a bad thing overall. They could have done some things inside of 1559 or alongside of 1559 to, they could have thrown us a bone, so to speak, gave us like a 0.5 increase in block rewards. Because here's the thing, they're moving to proof of stake. There's no doubt about that. Eventually, we are not going to be able to mine Ethereum on GPUs, ASICs, or anything else. So it's almost like, can't you just do something to like get us through this, to transition us, like, I don't know. It's frustrating, but I like to look at things from both points of view, right? So 1559, I'm still kind of on the fence, although the real problem that I have with 1559 is this last round of talks and discussions, they brought up MEV. And before I talk about MEV though, let me talk about 51% attacks, because I think in my mind, Ethereum has enough hash rate that if you would have to be super malicious, right? You would have to be a very well-funded, super malicious entity in order to 51% attack, even if they do lose a huge amount of hash rate. If GPU miners go off and do their own thing and whatever, if you had enough hash rate to 51% attack, even after the drop, you would probably be better off just mining the coin, right? You would probably, because unless your intention is to destroy the chain or to really damage the, what's the word? The reputation of Ethereum, right? If that was your goal, then obviously, you would, if you had enough money, it would be worth it to you in your mind to actually attack it. But point being, I think that it is something that we have to look at from a security standpoint. But if you don't already have a huge bag of Ethereum that you're going to double spend somewhere during this 51% attack, then you would be way better off just mining the chain and just reaping the rewards from that until they go to proof of stake, obviously. But that's just my opinion. I don't know.
They would even consider the option of increasing the block reward by 1. It's
right.
Just 1.
Not even 0.5.
They wouldn't.
Not even 0.5. They could have compromised a little bit. And again, we get it. We get it. We don't owe them nothing. They don't owe us anything. We're not the same thing. I get it. But there's a problem with how they perceive miners in general, because they lump all of mining into one thing. The pools, GPU miners, ASIC miners, all of it is one thing to them. And they don't understand that there's like segments inside of each mining niche, whatever you want to call it. So whenever you do that, whenever you lump all this together, it's you will have the wrong assumptions. You will have the wrong opinion of what that group actually does.
Before you go into MEV, quick question. if all of the miners, GPU miners throughout the world, right? So all of us miners are spread out throughout the entire world. We're mining, we're hope securing. That's a decentralized network. What happens if all those GPU miners and stuff like that only centralize or only go down into an ASIC network where we have a majority in China? Would that be considered centralized?
Oh yeah, I mean, it depends. I mean, if the it would be a centralization of where the hash power came from, but not necessarily like truly centralized as far as management goes and stuff. But yeah, Ethereum itself would still be decentralized, but not the actual network.
Power.
Yeah, the hash power would all be centralized, and there could be situations where there's collusion and stuff like that between the pools. And
what happens if China decides to throw some new regulation or somehow decides to stop power to these facilities? Then we lose much of the network hash rate.
Yeah,
that could be a problem.
That would be a significant risk. That would be a real risk, right there.
I mean, unless the ASIC manufacturers that are there know something we don't. I mean, that's a possibility, a very rare possibility, because I think China's a little bit more open to crypto now. But we got various countries coming out and either in support of crypto or against crypto. But that's a different topic for a different day. So let's talk MEV, Savage.
So whenever all this 1559 conversations was going on, in one of the last meetings, they talked about MEV. They just threw it out there like everyone knew what it was and everyone knew what they were talking about. And it, for all of us in the mining community, we were like, MEV, what? Miner extracted value? What are you talking about, right? So then we all had to start doing a little bit of homework, and it's almost like it's a misnamed thing, because they call it MEV, miner extracted value, whenever miners, especially hobby home miners or small scale, they have literally nothing to do with it. Nothing to do with it, because MEV has to do with decentralized exchanges, permissionless decentralized exchanges, a trading bot, and a node.
An arbiter,
right?
yeah.
So those are arbitrage bot. So those are the key players. A miner does not have anything to do with it. An actual miner. Again, this is where they go back to lumping everybody into one thing. Like us that are dedicating hash power to Ethereum, we don't get to decide what order the transactions are in the mempool. We don't get to do that, So we're validating it or verifying it, and eventually getting it added to the blockchain, but we don't control how they're ordered. And that's the thing. Like originally blockchains were, they promised this permissionless transfer of value in a peer-to-peer network. Then there were smart contracts. There were different additional things. If you don't know what MEV is, then it's not surprising, because it's kind of new. It's been around a while for the people that knew how to exploit it or how to use it, but it really has gained a lot of momentum since the decentralized exchanges. That's the key. The key point is the DEXs. But the way they describe it, the mempool, if you're not familiar, so the mempool is like unverified transactions. And if you have a bot that can actually analyze the mempool, there is a literal war going on every 13 seconds for every transaction on the Ethereum network, and we're all oblivious to it, right? Because we turn our rigs on and we see 32 mega hash on the RX 580, and we're like, right on, let's go, right? And we get those rewards. But on the trading bot side, and the DEXs and the people running the nodes and all that, that's a whole different thing. They are fighting. There's bots that fight each other for ordering of the transactions in the queue, in the mempool. There's different names for it: transaction queue, mempool. Mempool is kind of a Bitcoin term. I think they call it a transaction pool in Ethereum. That's kind of like the official name. But we'll say mempool because that's like universal. So the mempool, there's a war going on in there, and these arbitrage bots. So like the way it kind of works, I'm going to only take one example. There are, I don't know, dozens of different ways of using this information to make a profit. But simply, you would have, like, let's say you had a bot and you were analyzing the transactions in the mempool, and you saw one that was a huge trade that looked profitable. Right now, all this is done. This is not someone sitting at a computer going, "All right,
It's all done automatically.
this is all automatic." And the way the analogy would be, everybody's seen like the trading floor of the New York Stock Exchange, for example. You see all the people out there, buy, sell, throwing paper around and all that stuff.
Right.
That is literally what is going on inside of the mempool, but from bots.
So all these bots are fighting. They find this transaction that's probably the most profitable out of all the other ones, and they're trying to get that one over or beat every other bot to that.
Yeah, and so from an end user standpoint, what you should be thinking about is, well, this, because what they're also doing is jacking up the gas prices. Okay, so in order to be above that other transaction, they're pumping up their gas prices. So what does that do to your transaction fees?
Raises it.
Right. So you're having bots artificially increase the gas fees and increase the transaction fees, and that's what we're seeing right now. All this NFT DeFi stuff that's going on, and all these more bots are looking at the mempool and pumping up these gas fees and stuff. That's exactly what's happening. It's crazy. It's actually crazy to think about what is going on inside this thing. But
so an investor comes along, they're like, all right, I got 5 Ethereum and I want to swap it for Uniswap or whatever. I want to pay whatever the going rate is, but I want my transaction to be executed first. So I'm going to pay an exorbitant amount of fee because I don't care. 5 Ethereum, whatever, man. I could spend hundreds of $1,000s. I don't care. I'm a big whale. So I pay a bunch of money to get my transaction added first and get done first. The bots fight it out to get my transaction that I just put in, pump up whatever, and whoever actually mines that will get the profits of that particular block or that particular transaction, right?
Right.
So for big wigs,
more complicated, like inside of the queue, like what is actually going on inside of the mempool, but just know that they're looking at every trade, and it's happening on dexes, which are permissionless, right? So there's no, it just goes as fast as. That's another thing. What the bot folks do is they have a very close connection, a very low latency connection to the dexes, and the lower the latency, the faster
better
they can be, the better, right?
It's the same thing. It's the same thing that they used to do with the stock market. So back in the day, people.
I was going to bring up that whole analogy too. Yeah.
Yeah, people back in the day, companies used to build their offices as close to the New York Stock Exchange because the closer your servers are, the lower the latency, the better the connection you could have to execute transactions faster than the rest of the world. So they would literally build their offices around the New York Stock Exchange, have like the best connection that they could at the time to execute these transactions. And that's kind of like the same concept of that's going on here. But here's the problem that I have. So with all this happening, the whales, the big guys, the investors, stuff like that, they don't care. They'll pay whatever the fee is to make sure their transaction gets executed fast because they're buying in bulk.
Even for the thousands of dollars. Yep.
But the individual or retail investor is going, well, I'm not going to pay $10 for 5. Like, no, I'm not going to do that. I'm not going to do it. Whatever. So they don't like it. Hence, why EIP 1559 is coming along. It would make things a little bit easier for those individuals as well as even some of the big guys. But
here's the thing, though. Here's the relationship with 1559 is there really isn't one, because there's still the minor tip. So with 1559, I think that we're still going to see the same exact thing. This is not stopping that MEV problem that Ethereum has, and this is a problem. This is the real problem that they should be addressing, not burning a little bit of a fee for that so that it doesn't go to miners. MEV is the risk. That's the threat to what is actually happening on Ethereum.
That's a very good point, Savage. That is definitely a very good point. And another concern I have is, so MEV's been around for a while. Why is it that we only just heard about it when Bits Be Trippin' called us all to a round table and had a conversation? Why did we just learn about it? And secondly, Why are they not working with pools to help them out and set it up? Why wasn't this set up before when they first started implementing this?
Right.
Why is it the pool's responsibility to do this when they should be working with the pools to help set the, hey guys, you're missing out on some potential here. Let me work with you to help you figure this out, get your pool set up so that way you can access this MEV and do that. But they didn't do that.
Yeah,
it was like a little secret club that, you know, only exclusive members got into. And
right.
So
that was a weird thing about the 1559 conversation, because they threw it out there like, well, listen guys, don't worry, you still have MEV. And we're like, what's that?
What the heck is MEV?
So now we're the ones that are the idiots for not implementing it already. It's like, what are you talking about? The home miner can't do it. It's not.
It's got to be implemented at the pool level.
But right, the pool would actually be the ones doing it. And I don't know if there are any that do. I don't think so. But they could be, but I don't think that they're passing that. Why
would Chris from Flexpool and this is why when I talked to him, why would Chris from Flexpool and some of the others that signed this little online document saying that they don't support EIP 1559 sign it if they knew about MEV? This doesn't compute to me. I don't know why it was such and maybe there was something I missed. Maybe it was put out, hey, MEV is available, guys. You need to do this, this, and this. Maybe there was something out and I just completely missed it, but I don't think there was an announcement of some type or any type of exposure saying, hey, yeah, MEV is available. The pools just need to implement it. But there's also if I'm a company, right, and I buy all this hardware and service and stuff like that, I paid you for the equipment, but I also pay you to set it up. If you just come and drop off all the hardware at my office and then I got to find somebody else to hook it up, then what's the point of paying you? Like, you need to come work with me to get everything set up. And they should have been, if MEV was available, I feel that the Ethereum network or the devs and the people in it should have been like, hey, make sure you're doing this, let's implement this, work with me, and we'll get this set up. It may take some time to do so. I don't know what the process is, but they should have been doing that, and they didn't do that. And so now this MEV thing is coming out. I don't like what you just said about the bots and stuff like that, and automatically inflating the fees and stuff like that just to pump a transaction. I understand if the user pays an exorbitant amount to get the transaction process first, but if the bots are automatically doing it as well, that's kind of ridiculous. So
there's also this feature of Ethereum called what is it called? Self-destruct that Vitalik was talking about. Now this could stop if they did away with the self-destruct ability of a transaction, because what they do is they keep bidding the transaction higher and higher in the queue so that they, or wherever they need it to be in the queue, to sandwich that profitable trade so that they can arbitrage off of it. But if they did away with self-destruct, it would make, the way I understand it, is it would make it too risky for the trading bots to actually perform this function. So that could be like a way of doing away with MEV. But then, if they're going to do away with MEV, then what they were talking about throwing us a bone with MEV is irrelevant, because if it's going away, then we really are screwed as miners as far as the rewards goes. So,
man,
I don't know.
Well,
it's craziness.
I need more education on the MEV subject. I really want to hear about it from the pool's point of view. In case you guys weren't aware, by the way, I appreciate, first off, you guys hanging out and stuff like that, but you guys can join the X Special Forces, get access to some behind-the-scenes items. I don't often post, but when I do, I try to make it relevant content, or content that I feel is relevant to the channel. Let's switch subjects to a more happier subject, all right? And maybe this is not a happy subject, but I want to play this video clip for you real quick from a guy that I respect in our industry. And keep the Ethereum discussion going, everybody, please. EIP 1559 is scheduled. There's nothing we could do about changing that, but
July, right?
Yeah, it's for July, and the London hard fork. There's nothing we could do to change that, but Let's keep the conversation going in a positive light. Represent miners in a positive light, regardless if what they're doing we don't agree with 100%. I do agree with some of it, just not all of it, and I don't like the implementation. And now that Savage Mind has opened my eyes a little bit to MEV, I need to do some more research on my own. But yeah, we need to be educated, so that way we can perform or inform others, or if we're going to have a discussion, not an argument, but an open discussion, a debate, we have facts behind that supporting it. And that's why Bitsby Trippin did all his data and research and stuff like that, and they didn't even give him a time of day to actually provide that data or information. Hey, you got 2 minutes to answer 5 questions. What? No. But anyways, that's neither here or there. They need to show the miners a little bit more respect in what they're doing, but they're already on this mindset that we left, our bags are packed, we moved out of the house, we're moving to proof of stake. Well, you've been saying you've been moving to proof of stake for a while now, bud. Where you at? All these other opportunities are popping up, layer 2 solutions and other applications that are capable of staking, and here you are, 2021, and you're still saying it's X amount of time out. You don't have even given us a concrete date, so you better figure it out. 51% attack is possible, as much as they say it's not. Whatever.
Real quick on MEV too. I know you wanted to move on, but I do want to make this really clear, because I think I didn't get this across. But MEV is actually an exploit on the consensus level of Ethereum. It's an exploit. It's a vulnerability. Okay, so whenever they are talking about you guys should be using MEV, they're literally saying, hey, go ahead and exploit this fundamental capability on our network to make more profit. So what sense does that make? Anyway, all right, yeah. I'm done with it.
All right, so this guy, I respect in the community. Moore's Law is Dead is pretty good guy. I want to play this video for you, just this particular part, so you guys can listen. And we're gonna wrap up things here. We got 3 minutes to go. Let's see. I just want you guys to listen to this, okay?
Let me put down a timestamp.
We can't hear it.
Okay. Mining degradation is what I'll call this. So Peter Moore writes in, just like you guys can for free if you support us on Patreon. And he asked,
I don't know. Can everybody else hear it? Because I can. Okay.
The YouTube channel Testing Games recently released a video claiming that prolonged mining on a graphics card reduces its performance over time. What are your thoughts on this?
So he's talking about prolonged mining on a graphics card reduces its performance over time. And this is a tech guy that I respect in the community, primarily for gaming. He did mine in the past, and this is his comments. And
do you find Testing Games' conclusion to be flawed? So I haven't, I just got this reader mail, right? I didn't have time to watch the video, but what I will point you guys towards, let me see the performance voltage. There's a really good video that looks at how to do this. Adored TV did this one video, I think, a year ago, where he basically showed that AMD and Nvidia are aware that over time their graphics cards need more voltage due to voltage degradation through usage over time to keep the same clock speeds that they have at stock. And that Nvidia is just kind of better at handling this. And that's one of the main reasons AMD overvolts their cards, is because AMD has a tendency to sell, I think they always do. They literally take the same, cards that they would sell to the professional market, and they sell them to gamers. And so what they do is they increase the voltage on the gaming cards and increase the clock speeds, whereas NVIDIA seems to do a bit more intelligent binning. I may be paraphrasing this, a little oversimplified, but I think that's what Adored TV found. And so my point in this being, though, AMD is already overvolting their gaming cards because they need to make sure they last a long time when they are sold to the professional market, or that Silicon does. And it's not just mining. If something gets heavy usage, it loses performance over time. And in fact, the gaming, if you do it 4 or 6 hours a day, because the voltage fluctuates more than mining, tends to do more damage to the card over time. So I can't comment on mining making cards lose their performance over time, but I will say that there is some level of voltage degradation from any usage. And per hour, gaming's probably actually worse for the graphics card. It's better for a graphics card to run at a fixed voltage at fixed fan speeds because there's less wear and tear on the card then. And that's all I can say.
So, all right. So just to summarize it for you, he says he can't specifically say that mining is bad for the GPU, but running any hardware for extended periods of time can degrade the performance. But he says that AMD has a tendency to overvolt its cards so that way it will continue to maintain its performance over time. But as miners, running it at a fixed voltage or a fixed fan speed is actually better than gaming on it, 8 to 12 hours a day when it's overclocking and overvolting a lot more, because we always undervolt. We always drop the TDP. So this whole argument of don't buy mining graphics cards, to me, is null and void. I still have my 980 Ti that's still kicking. But the fact that he said that makes me feel a lot better overall. Now, he's not saying he supports miners. He used to mine himself, but he's a guy that I respect because he's knowledgeable, and he's kind of more like me as far as the tech perspective, looking into hardware, the voltages and getting down to the nitty-gritty, the PCB design and stuff like that. That's what I really like. So it was nice to hear him say that. I was just watching this video and I heard that question come up, and I was like, okay. But what got my attention was the Intel Xe DG2. Intel is planning on coming out with desktop GPUs. I do plan on doing a video about my expectations with Intel GPUs as far as the mining space, so stay tuned for that. That may be not to the end of March or sometime, but just bear with me. But yeah, just know, guys, if you're undervolting, underclocking, and running your GPUs at a fixed fan speed, you'll be completely fine. You don't need to worry about it. Gaming on it 24/7 can lead to more damage in some cases, or more degradation. It's not going to kill it like in 24 hours, but over time, obviously, things do wear out as you continue to run, because voltage is running through the various components, SMDs, silicon, and over time, that that will wear down the components, or something may fail on it. So yeah, I'm gonna post a video. Let me go back to it real quick. It was 16:05. Share, copy. All right, there you go, guys. Check that out after the live stream. I'll post it right now. If you guys want to join the Discord, you got to join me down in the join section of the SerpentX Special Forces. It is behind a paywall. I apologize. It's the $4.99 one, and I did that because I do not want to see a bunch of bots take over my Discord. Do not let anybody scam you. There are fake channels popping up all over the place. I will not ask you to call me. I will not ask you to email me unless it's a giveaway, and you will know it's a giveaway. I will not ask you to send me Ethereum or Bitcoin or anything like that. None of the major guys will do that in the first place. So don't fall for these stupid scams. Be careful. Protect yourself. Protect your assets. And keep the Ethereum conversation regarding EIP 1559. EIP 1559, like I said, is already in the bag. It's going to be done. London's coming. Whatever. London Bridge is falling down. But the conversation about MEV, we need to do some more insight on and get some more research, but I want to hear about it from the pool's perspective. So Chris from FlexPool, if you got time to join me one of these Saturdays, I'll be more than happy to talk with you. That would be a great privilege and an honor. But that's all I got for you guys today. I thank you so much for watching. Savage, you got any closing words?
No, I don't. I'm good. Thanks for everybody watching. You guys are awesome.
All right. Well, let's see here. Is Bitsby Trippin' going? I think Bitsby Trippin' is supposed to be going online, but I don't see him on. Let me see here. Bitsby Trippin'. Yeah, he doesn't have anything scheduled yet. He said he was going to go on this afternoon, but I think it might be Central Time. And I'm Eastern Standard Time. So we'll do this every Saturday. Whoa. Didn't mean to show you that. Didn't mean to show you that. I'll see you guys every Saturday at 12 p.m. Eastern Standard Time, unless otherwise I will tell you on Twitter. Do me a favor, subscribe to the channel if you're new, like the video on the way out, and check me out on Twitter and other places to stay informed and up to date on what's going on in the crypto world. We'll take it the rest of the way, and I'll catch you guys next time. Take care. Gonna play a little sponsor spot for you guys. If you guys aren't aware, link is in the description to dogelord.com, where you can buy Savage Mind merch, Red Panda merch. Well, that didn't work. My sponsor spot video is not working. That's messed up. All right. Well, anyways, check out the link in the description to go to doorslord.com and check out some of the merch that